Hey, it's Ken Finnan at Capital Advantage Tutoring, and it's time for a Tuesday night edition of Live Q&A. Asking me any questions that you have on any of the Series 7, on any of the Series 7 exams. I have no chat here, so I'm going to have to get my phone so I can't see it. Welcome. Okay. Because I ain't got no chat. Oh, there we go. Hello, Ginger. How are you? I wonder why that happened. Ginger, how are we doing? We're going light today. Oh, we're getting up there. Okay, welcome. So, Taylor, Jessica, John, how are you? Everyone, how's everyone doing? We're doing well. Okay, a couple things. We have, if you like what I'm doing, so if you want the Series 7 exam, the SIE exam, Series 6, 63, 65, 66, and the A&T, Teresa, I think it was, right? So, if you want any of these help with these exams, come on and ask questions. We'll go from there. Maybe I'm not for everyone. If you want a more laid back, more strict, scripted, slower paced, longer winded, whatever it is, there are other YouTube channels for you. But here, it's fast paced. It's not always scripted, and we're always doing stuff. Okay. So I just dropped a couple more things. I started. Funny. Yeah, I guess so. Or maybe something else. Maybe maybe not everyone's cup of tea. Okay, so now, Taylor, welcome. Jessica, Ginger, John, Therese, Alexis, Mike, Georgiana. Okay, now I've already done. We had a membership. We had a one of my Zoom membership calls yesterday. I think John and Ryan were on it. It was good. It was only 2 people. It was almost like a little less, almost like a semi-private lesson, which wasn't bad for them. Remember, I have the 3 different levels. I have the one, if you just want my option stuff, it's the cheap one. It's the $9.99 a month. Here's my selling pitch. If you want to have one, if you want, Jessica, put it in here. So, Taylor, no, absolutely. Happy to help. If you want one every week, I do a Zoom lesson every Monday, plus you get the access to my option videos and stuff. And then the third one is the serious one. It's where you get access to my videos, you get access to Jacob, how are you? You get access to my the one once a week, and then the every other week it's a guaranteed no more than 2 people ever on a Zoom. It's almost like having tutoring stuff. Okay. Jessica, I think there is a character limit, so you have to do part of it. Look, Jessica, if you want to text it to me, if it's too big, just shoot it over, and I'll read it out, and we'll do it on there. Okay. So since we've last met, someone went to space. Okay. So since we last met, there was we've had a billionaire in space, and hopefully in the next week or 2 we'll have another one. Okay. Now let's do. Somebody asked a question. Again, if you like what I'm doing, hit like, subscribe, share. I hit the like, whatever it is. Tell people. Tell your college people. Tell your registration people that there's free stuff on here. We're gonna go. Ruben, how are you? Okay, so let's start with the one. Therese comes at me hard. Okay, first of all, there's one more thing. Everyone, we're starting study groups. Remember something. We're trying to do some study groups like Zoom stuff. Jacob is doing one of them. That's mostly for SIE and 7. I think Jacob's running it. Anyone who wants to be part of the Zoom study groups, reach out to him. And I think they're trying to do it. And I think, don't mean to jump that on you, but that's that. And I think Vance had come on and said something about he thought it wasn't just for it's SIE he was doing. I think that study group, even if you're studying for the SIE and the 7, there's a lot of overlap. So it's worth being in the same room together. John's doing the 66. So if anyone is doing the 66, I think John would be interested in a study group. I just don't know if it's between the 7 and the SIE and the 66, if they should mix. So if anyone's taking the 63 or 66, maybe reach out to John, or have me reach out and we connect you guys, see if you guys can work something out. Anyway, back to this. Now, so the study groups do help. I'm not monitoring them. I'm not running them or anything, because if I did, I'd have to charge. And it's much better to have you guys just work with each other, because it's good to bounce ideas off each other since people are still at home and people are still at still. Also, I put out a new video about 3 hours ago on if you fail. I was walking through New York and I just got a little inspired. Okay, let's do some questions. Okay. So, Teresa, an investor is short stock. So, short, it means we borrowed shares and then we sold them hoping they go down. Okay, good. Okay. Current market price of the stock is 40. So, he's making some money. The investor anticipates the price will continue to decline. We think we're still bearish, but we think there might be a temporary rise and we want to protect ourselves. And I don't want to close it out. So, what should I do? So, the choices are buy a call, sell a call, buy a put, or buy a straddle. Okay, so if I'm short stock, I'm bearish. So I wanted to go down. So what am I going to do? I'm going to do bullish things. So I'm going to buy a call or sell a put. Those are the two choices. But I see the word protect. Buyers protect, sellers for income. Boom. Buy for protect, Ruben. Absolutely. You buy a call. I think Jessica sent the message. So you buy a call. So if you're short stock, let's remember this. If we're short stock, I either sell a put for income, or generate cash, or add profits, or increase yield, or I buy a call for protection. I like it. If I'm long stock, okay, yes, I can. If you're long stock, I want it to go up, but I'm afraid it's going to go down. So if I'm long stock, I'm bullish. I'd either do sell a call or buy a put. Sell a call for income, buy a put for protection. What is really cool is that I forgot. Oh, if you do both, if you buy stock, you can actually sell a call and take that income to buy a put, and that's called a collar. You're selling it. If you're long stock, you can either sell a call or buy a put. Ruben, I just did a video on it. Go watch it. I just did a video on it. Keep doing it. Keep working on it. I just did a video, I think this morning it came out. Go watch it. It's only like 10 minutes long. Watch the whole thing. No, don't watch 2 minutes of it. So if you're long stock, you can either sell a call for income or buy a put for protection. Write that shit down. And if you do both at the same time, it's called a collar, and you're actually you're limiting your upside, but you're using the premium from selling the collar to pay for the put. I hope that helps. Okay, legal opinion I will do. Okay. So let's see. I love these. I love these extra slobs over bliss. It's going to help, I hope. Okay. An individual owns an ARF. Okay. An individual. Okay, so John. No. So in reality, I guess you probably. So he's asking with oral discretion. Okay. So John just said, I'll get Jessica to do yours in a second. Let me get this one out of the way. So let me do those two, then I'll hit Jessica's. So hold on, Matt. I love it. Congratulations, Matthew Lebowski. Congratulations. Your name is famous among the tens of people that follow me. Congratulations, Matt. I am so happy for you. You done. Here's the thing. So you're done. The greatest feeling in the world is being done. That's awesome. I love that. I love it. Okay. Now, John's asking, so you know that with discretion, normally for the Series 7 and 6 and all in the SIE, you need written approval, you need written permission or written power of attorney from your customer in hand before you do it. Okay. Now, on the 63, 65, 66, the state level allows for investment advisors. Yes, Taylor, you will be done tomorrow. Investment advisors, Matt, I am so happy for you. Investment advisors are allowed to accept oral or verbal discretion for up to 10 days. To continue that beyond the 10 days, you need to get it in writing. The test will not say what happens if you want it for 11 days. It's not playing that game, okay? The test. So I really think that you could justify probably getting another oral, but I do think that once the 10 days is over, you need to get it in writing or you're done. It's kind of what it is. Right, I'm empty. I love that. I love when these things never last as long as I want. I've now gone Holy crap. Since September, since I gave up Diet Coke. Pretty freaking. Okay. So let me finish up with this. We got, okay, so John, I hope that helps. Legal opinion. I think Georgiana asked about a legal opinion. Okay. The legal opinion. So think about this. So if I'm going to issue a revenue bond, this is really only for revenues. You could make it for a GO, but let's talk about for revenue. Legal opinion is you have a bond counsel. What's a bond counsel? Counsel at law. That's a lawyer. So you have a bond lawyer, an attorney who's familiar with bond law and all local statutes and everything. Will look over before the bond issues. They will look over the legal statutes. They will look over to make sure that the company is allowed to issue a bond, and they will look at the tax status. So really, the legal opinion is looking at two things. One that oh my God, don't you hate when you get old? Okay, so one, it's going to be that is it legal to issue? So like think about this. If you look at New York City, they have the Port Authority. Okay, the Port Authority is a corporation that has been authorized by New York City to run the buses and the buses and the bridges and stuff. So and the PATH train. If that happens, so every year or whatever, 2 years, they have a contract, they re-sign it, they're never going to change it. But the legal opinion, the lawyer will look to make sure that contract is valid, that the Port Authority is allowed to issue a bond, because the word authority always means a revenue bond. So the Port Authority issues revenue bonds because you pay to ride the buses and the subways, not the subways, but ride the bridges. So they issue revenue bonds. The lawyer, the bond counsel, will look at both the contracts to make sure that they're legally allowed to issue it, make sure that the project place you're doing, that the liens are clean, and that there's not too much corporate involvement in it, and that's tax-free. So there's only two things a legal opinion is going to be for. One, is it legal to issue? And two, is the issue tax-free? And what do we want? We want an unqualified opinion or non-qualified, either one. Unqualified means that there's no problems. I give an unqualified endorsement of the deal, so there's no issues. Qualified means there's an issue. Like there's something that we're looking at that we think is a problem. So a qualified opinion would be like we have an issue. You might have to do something. It might be taxable. There might be a lien or something like that on it. So a legal opinion is just looking at a revenue bond to decide if they can issue it, if it's legal, and if it's tax-free. They do not look at whether it's going to make money. They do not look at suitability. They do not look at anything other than whether they're allowed to and whether it's tax-free. Okay. Before I go on to the next one, an individual owns an ARF corporate 8% convertible debenture. So an individual owns an ARF corporate 8% convertible debenture. So we know that we have to do stuff. The debentures are convertible at 20. So remember, to get the ratio, we do par divided by the convertible price. So note 1,000 divided by 20. That means we're going to get 50 shares. We're going to get 50 shares for every bond we issue. And it's currently selling in the market at 97.5. This is where it gets complicated and where they won't do it on the test. If common stock is trading in the market at 18, what price should the debenture sell to be at 10? So we do know that since we do 1,000 divided by the convertible price, it gives me 50 shares. So I'm going to get 50 shares for every bond I convert, right? So we know that. So we're going to get 50 shares for every bond I convert, and each share is worth $18, okay? So every share is worth 18. We're going to do this. We're going to do the handy-dandy calculator and rip out 18 times 50. So parity would be 900, okay? Because that's the ratio of the number of shares times the bond price. But it's saying, what would a price, and this is where they get you, should the debenture to sell that to be a 10% premium to parity? So we want the number that's 10% higher than 900. So we're going to do equals, and then we're going to do times 1.1. Or you could just times 0.1 or 10% and then add it, but I'm lazy. So I'm going to do 900 times 1.1. That gives me 990. Jessica, that's the answer. So again, the secret is get the parity. We know the parity is 1,000 divided by 20 gives me 50 shares. That ratio, 50 times the market price of the stock, which is 18, gives me 900. That's the parity. If I said what price to be 10% of it, I just add 10% to that. Hope that helps. Okay. Treasury arbitrage. Okay, so Teresa always with the question. So Treasury arbitrage, it's love because there some days we go minutes and minutes with nobody asking a question and me just rambling, which is bad for everyone. Treasury arbitrage generally prohibits issues of muni securities from. Okay, so Treasury arbitrage is when you buy one thing and sell another to make the money. So Treasury arbitrage would be a city or a town buying treasuries. Now, here's the thing. Treasuries pay actually a higher coupon than some of the higher rated munis. It's not after taxes, it's not that way, but because treasuries are taxable federally and munis are not, usually treasuries might have a higher coupon than a muni. So if I'm a muni and I could issue bonds at 3% and I could buy treasuries at 5%, I could do that all day long. I'd issue a 4% bond and buy a 5% bond with that, and I'd make the spread. That's what Treasury arbitrage is. They're not allowed to do that. The only time that munis are allowed to buy government bonds is if they're doing pre-refunding, which means you're using it to pay off older bonds and rates have gone down. So they're not allowed to issue bonds just to do that. Or every state in the world would just do that and live off they'd issue $1 billion bonds, $1 billion worth of bonds, use it to buy $1 billion worth of treasuries and make $100 million a year just in interest if you could pick up a percent. So they're not doing that. Okay. So they're not, the federal government does not allow the states to buy treasuries and profit off of it. So that's what Treasury arbitrage is. Not going to happen. Hope you all liked my what happens if I fail video. I did slobs or bliss. And all you taking the 6, I started this series 6 yesterday, the first chapter. I also did the first chapter of series 7. Yes, there's a shitload of overlap. The first ones are going to be both for the 6 and the 7, and then they start to diverge. Okay. 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 Taylor, there's no way they do the difference on that. Okay. So she's saying I got a question wrong, saying that an offer and a solicitation are not the same thing, saying that an offer is only in the state it originates, but in a solicitation when it's out of state. I don't think that's an issue at all. Okay. I don't think so. An offer is the attempt to sell. I think it is a solicitation. And then the sale is a transaction. I think that must be training consultants or somebody doing some crazy, or maybe Past Perfect, because Past Perfect kind of goes deep into shit and gets some shit wrong. I don't think that they will ever go that deep, and I think they're wrong on that 100%. As far as this test goes, an offer is offer, and you're soliciting business. Okay, I hope that helps. I wouldn't worry about that too much. Okay. 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 Taylor, hope that helps. Don't sweat. Seriously, don't sweat that. Okay. John, what are prepaid fees of more than $500 6 months in advance? Let me make sure there's no other questions first. Okay. Okay. Hey, I thought my fail video was actually good. I'm getting good reactions from that. Yeah, training consultants takes some crazy stuff. Okay. Exactly. No one gives a shit that you failed. They don't. After the facts, I know so many people that failed it 2 or 3 times, and then a year later, nobody even remembers. Nobody cares. Once you cross, guys, if you fail, remember, once you cross that barrier and into you pass the stuff, nobody cares. It's a tough 30 days. It's tough. It really is. That first day is the worst. So own it. Okay. John, what are prepaid fees of more than $500 6 months or more in advance? Okay. So there's a thing called custody. Custody is when you have control of someone's assets or their assets, and they're holding to a higher standard. I'm kind of broad. I'm making a very broad statement on this, but custody is pretty much when you make. God, it's amazing how you get distracted on shit all the time. So I'm picturing something stupid. So custody is when you have access or control or something to that of their accounts. If you do have custody, then you have to notify the administrator, have to put up a surety bond, have to send quarterly statements, get annual audit, all that stuff. So some of the things that trigger custody. One is if you have full discretion, not limited. What's the difference between full and limited? Full means you can do the trades, but it can also withdraw money for the client's best interest. Limited means you can do trades, but you can't withdraw the money, so that's not custody. If you get a check and don't forward that within 3 days, if you accept $500 in prepaid fees 6 months or more in advance of doing business, giving advice. So it's almost like I'm going to give you $500 now, and in 6 months we start working together. Or I'm giving you the $500 for the next 6 months, not over the next 6 months, that it covers the period starting in 6 months. So like right now, if I put money in, I paid up my fees. I did $500 in prepaid fees for the shit that's starting in January. That's $500 in prepaid fees. That would mean that you have custody, which means that the agent, the IA might have net worth requirements, because if they don't, they have to put up a surety bond. They have to do the audit. They're considered to have custody. So again, the substantial prepaid fees are, if you put up prepaid fees that are 6 months ahead for 6 months from now, not the next 6 months, but start covering the period in more than 6 months or more. If it's state, it's $500. If it's federal, it's $1,200. Okay. So that's where that goes. So if you pay prepaid fees of $1,200 or more under the SEC, or $500 state, that will be considered custody, and you have to follow all those rules. Hope that helps, Tom. Okay. Okay. Nilo, I can do that. Hold on. So, okay, a lot of people use both. I'm not a huge fan of using both books, but I'm a fan of using both questions to get used to it. Here's why Kaplan seems harder. Kaplan goes deeper, sometimes too deep. Okay, I think Past Perfect goes really fucking deep. Kaplan goes too deep. Taney doesn't do deep enough, and STC is right around the good stuff. And Achievable does a good job. Like when I did my Achievable final, I've had at least 15 people come up to me and say that looked just like what they saw in the exam. Who knows? I mean, that's also it's perception, right? Like if you start with the STC and switch to Kaplan, Kaplan's harder. If you start with Kaplan and then switch to STC, STC seems harder. So it's all in the eye of the beholder. Like when I used to teach classes and all that, and I had a couple people over at Greco, if one person started the class and then another picked it up after a couple of days, the second person always got more shit. Okay, no matter what. Like I'm a fucking good teacher, and this guy John McAllister, who's a great teacher, also, whenever he started, and I think like he did the first day or two, and then I picked up, I always got shit. Okay, there were personalities, they like theirs, whatever it is. But whenever I started and he picked up, he got shit. So a lot of it's like what you start with. So you get used to STC, you get used to Kaplan, and then when you switch, or if you still Achievable, then you switch, the other vendor seems harder. It's just it's kind of just perception. But that being said, I think the Kaplan questions, their math stuff is harder. I also think they don't like using the percentage. They like using decimals instead of percentages, which is good for your calculator, but not so good on the real test. So whatever. Okay. They all have their own good and bad stuff. It's not a bad idea to take questions on both. I just think stick to one book, whichever one resonates with you, stick with. Okay. 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 Hold on. Here we go. Somebody asked a question. Okay. Look at that. Okay. There you go, Taylor. Look at that stuff. If you fall below in net worth, then you have to let the people know at the end of the day. I like it. Okay. 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 So suitability for options. Okay. So one, if you want detailed option stuff, I have the videos you can buy, or you can just become a member and you get the same thing. You go on my website, you can buy it. God, I'm selling like crazy today. See, again, what I'm doing is making offers. I'm actually making any sales. So according to the 63, I'm making offers, but there's no sales on the end of it. So that's kind of works. But it's if you really want heavy option stuff and how to solve them, buy my videos on my website or just be a member. Now, back onto this. Suitability for options. Let's go through this. I'm going to work on a video for this. Again, I'm a capitalist. So let's talk about a few things. So if you're bullish, straight up bullish speculation, buy a call. If you straight up bearish speculation, buy a put. If you want income and you're bearish, sell a call and you'll make the money from the premium. If you want income and you think it's going to be stable, both sell a call or sell a put, that's fine. So if you hear income, I'm selling an option. If I hear speculation, I'm buying an option by itself. Selling an option by itself is a naked strategy. It's a high risk, small reward for the premium. So if you're bearish and you think it's somewhat stable, you're going to do sell a call to bring the money in. If you're bullish and you think it's somewhat stable, you sell a put because then you bring in the premium. Remember, if you think the market's not going to move, buying an option doesn't do a good job because you're paying the premium and you're losing money. Let's change the other one. So if you're long stock and I want income, I'm going to sell a call. If I'm long stock and I want protection or hedging or insurance, I'm going to buy a put. If I'm short stock and I want protection, I'm going to buy a call. If I'm short stock and I want income, I'm going to sell a put. If I don't know where the fuck the market is going, I have no freaking idea. Okay, but I know it's going to move. I will buy a straddle. I'll buy a call, buy a put, and I pay whatever the premium is. The total I add up. I have 2 break evens. Remember, so straddles are neither bullish nor bearish. They want volatility or stability. If I buy a straddle, since I spent money, I need movement or I'm going to lose money. So I want it to move outside the range. I want volatility. If I think the market's not going to move, yes, I can sell a call or sell a put. Or I can sell both of them for income and just keep in the money. If it stays at the strike price, I keep the money. If I want a little bit more room for error, I could do a short combination, which is like sell a 50 call and sell a 45 put. So then I make my full premium anywhere in between 45 and 50 instead of just at the strike price. I increase my odds of making money, but I'm also making a little less money because less premiums. If I am bullish, but I want limited gain, limited loss, I can buy a call spread or a debit call spread. I can buy a call spread or do a debit call spread. If I'm bearish, I want limited gain, limited loss. Boom. I could buy or go a debit put spread. If I'm looking for a little bit of income and maybe limited gain, limited loss, but I'm still bearish, I could do a credit call spread. If I'm bullish a little bit and I want bullish a little bit, but I want income, I could do a credit or sell a put spread. If I think the market's going to be crazy volatile, that means the VIX is going to go up. So I'll buy VIX calls. If I think the market's very stable and it's not going to move very much, I'll buy VIX puts. If I have a bond or preferred portfolio, if I have a bond or preferred, which is fixed income, I'm where interest rates rise, so I'll buy an interest rate calls. Okay? If I think interest rates are going to stay the same, maybe I'll sell calls. Whatever it is, because you're buying on the rates. If I'm an exporter, and I'm worried that the foreign currency will drop, what do? I buy puts on the foreign currency. Why? Because there's no fucking options on the U.S. Why? Because we're in the greatest country in the world, and our dollar is the shit. Every other currency is pegged to us. We don't move. So remember that. So whenever it says, you should be thankful. If you see an exporter question, and it says they want to do something, and you see U.S. options as an answer, boom, if it's 2 of them, you now have a 50-50 shot of getting it right because there are no options on the U.S. dollar. So if I'm an exporter, I'm going to buy puts on the foreign currency. If I'm an importer, I'm going to buy calls. It is that freaking simple. If I want to bet on the market and I want to bet on the whole market as a whole, I buy index options. If I think it's going up, I buy index calls. If I think it's going down, I buy index puts. If I want income, you sell the shit. I hope that helps. Nilu. And anyone else who got something out of that on my fucking rant. That's a lot of anger. Okay. Okay, somebody just texted me, said they need to take the 3. In addition, I'm going to tell you guys, I think I'm going to start doing Series 3 videos at some point because that's fun shit. So if everyone wants to take the 3, that's all the future stuff. It's not bad. Okay. Hope that helps, Nilu. I really did. Okay. Did I take a breath during that entire time? Jesus. Okay. Okay. Again, Therese, do not, I think if I remember right, Therese, do not forget, do not stress that the test, if you're switching vendors, your test goes down. Kaplan is hard. Sometimes a little too hard. Okay. Taylor, go. You got this. Okay. Good luck tomorrow. You're going to nail it. Desi, how are you? Okay. Desi, there it is. I'm probably way behind. Probably I was congratulating already, but damn. Desi is, I love having her. I think she's done. Okay. Look at that, Desi. She nailed it. Desi beat the test. She kicked the shit out of the test. She's the funniest person. We got on the phone on Sunday after she passed it on Saturday. We did one session, I think, Desi, right? We did one, right? And then we just went over a lot of stuff the day before. We did a couple hours, and then she rocked that test. She may think I helped her. Maybe I did a little bit, but she worked her ass off. Desi worked her ass off, okay? Yes, long straddle. I do mean that. Okay. I might have said something wrong. So, okay. New Beauty, thank you very much. Desi, you don't know how happy I am that you passed. And that conversation we had was so funny. You were cursing as much as I do, which is awesome. Okay. Okay. Yeah. Jacob, I just did a video this morning, and I have a types of order. Jacob, I just did a video that came out this morning. Okay. Butterfly spreads will not be on the exam. If they are, it's a test question. Okay. Okay. Yeah, USA, baby. Okay. So here's the thing. Okay. Again, you don't know. I had the conversation. I wish I could have talked to Desi for hours, but I had a couple phone calls. She is the queen. I'm telling you, she's awesome. She's going to be a rock star one day. Keep her in mind. Okay. Okay. Guys, remember something. None of these tests really are super, super, super detailed. Yes, the 66 is more than the rest, but it's still not every little tiny nuance. You have to get the big picture for the most part. And if you're super, super detailed, you usually got a bad pull of the exam. That's all. Okay. Okay. Nilo, you can rewind. You can watch this tomorrow. Slow it down. Nilo, so what I just went off on, everyone, if I did the option stuff, it's going to be posted tomorrow. Press pause, write it down. Because I could spend probably an hour on that stuff, but I have to get it out. I have to make sure we all get it quickly. Okay. Now, I am not, Teresa, I'm not really doing options in my lives, but be happy to buy my videos or join the membership and get all my option stuff for shit. And it really does help. I even think Desi, who had her own option stuff, I think I helped her a little bit with hers. Okay. Okay. So again, anyone who I just ran on a 3-minute rant on options on suitability, listen to me, since it's options, I'm probably going to delete it after Thursday. So I would save this shit. Okay. And Thursday, I'm probably pulling this video when it posts tonight. I would watch it and then, or save it and then, and watch it on slow motion and watch that. Cause that stuff is probably 5 or 6 questions just there, just on options. Get on that. Okay. Now, yes, I can do that. But I actually have okay. So Trevor, yes, but I've done a video. You guys, this is the thing. So I love asking questions, but some of it you have to look up a little bit and watch my videos a little bit. I have a whole video on I have a video on muni spreads, the spreads, and then a video on the Active 33, which is on there. It's somewhere in there. But I'll do the 33 real quick. Okay, hold on. I am and Jacob, you're right. I am a huge fan of simplifying. Okay. Where are you? New Beauty. Boom, New Beauty. I'm so happy that it helped you. Okay, that it helps. Colin, butterfly spreads will not be on there. They're just going to be, it's basically 4 options. It's like a 4-legged spread in a way. And they're usually one volatility or stability. If they're on there, it's a test question. They're not really doing that. Kaplan loves to put them on there. Kaplan, STC, put them in their questions, and they're not going to be there. Okay. Henry, I know we got it. So now you're working on the concepts, right? Not worrying about the actual formulas. You're worrying about the big picture. For the 66 and all these exams, get the big picture. The little shit will fall, right? So just get the big picture and all the little stuff will start falling into place. Because if you understand this stuff, the little stuff becomes like just common sense. But if you're trying to remember every little tiny detail, you're not seeing the big picture and it's just memorization versus owning the material. Okay. Look, I'm not the kind of guy who's going to sit there and teach you the fucking history of shit. Nobody cares. Don't give a shit about the history of anything, right? All I want, I try to give it a story, enough of a story to make it be a hook, but you don't need to do a 3-minute thing on why something is if it's not going to do anything. And that's the other reason why I don't really bring a lot of current event stuff into this, unless I actually can feel the hook between what happened and what's going on, like short interest. People get questions. Jessica said she got a question on short interest theory. What's short interest theory? Short interest theory is the theory that the more people, so every month, FINRA publishes a short positions of each stock, the percentages. If you see a stock steadily rising in that percentage, that means more and more people are shorted. So eventually, and now you would think that would be bearish. It is, but at some point it becomes bullish because if so many people are shorted, they're going to have to buy it back. Oh, thank you so much. Desi, thank you. That was awesome. That's really cool looking robot. I like that. Thank you very much. I like that. The little pink robot. That's awesome, Desi. I am so happy for it. I love it. I thought I was going to send you a check for saying such nice things about me. I love it. Thank you so much. That's awesome. If I have, it took me a second to see it. I don't know why, but that's cute. That is really cute. Okay. So now, but this thing is, you don't have any more tests to take. And that's the other thing I have to say about Desi. She didn't need to take this test. She didn't need to take it. She took it because she wanted to make herself a better, more, move up in the world, which is awesome. That is such a great way to do it. Do it ahead of time so you don't have to think about it. It's better to do it when you can versus when you have to. Thank you, Daisy. So back to this. Short interest theory, the more people are short, the higher the short percentages, the more bullish it is, which seems so weird because eventually they have to buy the stock back. So what happens is if you see really high short interest, maybe buy calls on it, okay? And because you think it's going to go higher, okay? So that's what happened with GameStop. I would bring up GameStop that way because it was a very high short interest. It actually had 136%, which is fucking insane, which means actually people shorted 136% of what was actually out there, which means there were more people short than actually shares outstanding. So all the Wall Street bettors and all that, they said, fuck this, let's go on there. So they started buying it up and pushing it, creating panic buying. So it went from 50 to 500. And all the hedge funds and everything that were short the stock had to buy it back before they lost billions, which some of them did anyway. And the thing rose. And then when they're buying it, and then Wall Street bettors and the mean guys were buying it, and then the hedge funds were trying to cover the shorts, it just kept rising and rising and rising to a ridiculous level. It wouldn't last because it's not a really good company. It's a piece of shit company for the most part, but nothing wrong with it. I mean, it's what it is, but it wasn't a $500 stock company. So it rose and rose until it hit a point where people started buying back, and then the pressure left. So again, that's where some real world comes in. Remember, GameStop, high short interest, people bought it, went up. But other than that, I try not to do too much of the newsworthy shit because it doesn't end. Okay. Henry, you're going to nail it. I know you are, because I know that what you're going to do, Henry, is as soon as you're going to start reading the book cover to cover for the next week or two. Just read the book cover to cover, and you're going to go for, and then what happens is treat it as if it's your own little thing, right? So treat it as if you're starting over. Read the book cover to cover, even if, like I was talking to a person today, and I told her to read the book cover to cover, and I think it came across that I thought she wasn't ready, and no, that wasn't the point. It was strictly, I tell everyone, if you get a 71 or a 50, use this 30 days as magic and just read the book from cover to cover. Just one time, get everything in your head because you don't know what you're weak at, and just get it all in there, and then boom, you're good for some points. Okay, now, Trevor, the spread stuff, I can't do that on math. Go watch my Muni spread video. It should be in the Muni playlist. But let's talk about the Act of 1933. Now, remember something, okay? Guys, remember this. If I'm going too fast, slow it down. Tomorrow morning, put it on 50% or 75% and watch it. So I'm talking like this, or pause and play. I think that's what Desi said. She would pause and then go back and write down and keep moving. Okay, so now, Act of 33 is like a menu for how to bring a stock public. So this is for non-exempt securities that are like over 50 million, over 5 million. It used to be over 5 million, but really now anything so anything over 75 million would probably do this, because anything under 75 million could do a Reg A plus or a Reg D or something like that. Reg D, you can do as much as you want, but if you're going to raise $100 million, maybe you go through this. So Act of 33, first things first, you file the registration statement with who? Yeah, the SEC and any state if you have to. If it's not on an exchange, you have to register it in the various states also, but if it's on an exchange, fuck the states. So now we file a registration statement. Inside it is a prospectus, all that crap. So that starts a 20-day review. So we file the registration statement. And that starts a 20-day review, and that means the SEC is reviewing it. They're never going to approve it. They're just making sure you're not committing fraud. So basically, think of it this way. It's like getting a hunting license. They're not making sure that that you're good or not at what you do. They're making sure you disclose everything, and you're not a felon. That's kind of the way it goes. Think of when you're registered, that's about the level of it. I don't know if you're good at hunting or not, but you're not a felon, and you filled out all the paperwork and paid the fees. And you disclosed all the things you have. So file the registration statement 20 days later, the effective period. So during the pre-registration period is before you file the registration, can't do shit. You can hire an underwriter, but you can't talk to the public. During the 20-day review, Trevor, during the 20-day review, what you're going to do, what you're allowed to do is you're allowed to do a red herring, or what they call a preliminary prospectus. You can send that to everyone. What's a prospectus? It's a disclosure document. The preliminary one is called a red herring or a preliminary. What's missing on it is the date and the price. You don't know what the price. They put a range on it, but you don't know what the price is because you're not actually fucking effective yet. So you can also send out what they call a tombstone. Google tombstone ad. Okay, tombstone ad is an ad in the newspaper. It just says like, hey, we're issuing bonds or stock in this range of, here are all the underwriters, here are the range, and here's how much money we're bringing in. It's a very basic generic ad that you're allowed to do during a 20-day review. It's the non-advertising advertising. What else can you do? I mentioned it. Register in the various states. That's called blue skying the issue. So red herring, blue sky. Blue skying the issue is registering it in the various states. Then what's the third thing? You can actually get indications of interest. And the syndicate desk is building up a book of business. These indications of interest are just that. They're not binding. I'm not bound by it, nor the underwriter's not bound by it, nor is the investor. So that's this third thing. Then the fourth thing is they do this due diligence meeting, right? Where everyone gets together, the lawyers, accountants, and the underwriters, making sure everything's right, and then they go forward. And then on the effective date, they kick out the prospectus. When do you need a prospectus? By completion of the trade. The other thing is, how long after the IPO date of the POP, the initial public offering, do they need to get a prospectus? Okay, so here it is. If it's an over-the-counter IPO, it's for the next 90 days. Anyone who buys it from the underwriter has to get a prospectus. If it's an over-the-counter additional, which means you're issuing a second set, third set, fourth set, it's only 40 days. Very biblical. Noah, Moses, all that crap, 40 days. If it's on an exchange, it's only for 25 days. And if it's on an exchange, an additional, which means additional offerings, it's 0 days. Trevor, I hope that helps. If that went too fast, tomorrow, pause, and watch it again. And slow it down. Okay. John, again. Oh, guys, the pizza party. I didn't give a date yet, but I'm shooting for, I'm saying the first week of August. I said this, I would do the pizza party. Let's say Tuesday, August 3rd. At Uncle Paulie's I'll get the full name and everything, right by Grand Central, but on 45th. I'll put it all up there on Thursday. So I'm going to do the pizza party. Okay. I'm going to do the pizza party for people. Anyone who can come, and I'll do a Zoom party. I'm probably going to be Uncle Paul's. I'll make sure he says it's okay when I get there. It's not my Uncle Paul. It's on Vanderbilt between 45th and 46th. It's right next to the JP Morgan building. Okay. It's right next to Grand Central. There's a little bar across the street. It's great. An outdoor bar. We're going to go. That's what we're doing. So it's going to be Tuesday, August 3rd. The only way that doesn't happen is my wife gives birth. My wife, God, no, not yet. If my daughter gives birth days before, then I'll let everyone know. But either way, I'll probably still come because I'm not helping deliver that baby. I'm a useless grandfather. All I do is come in and spoil the damn kid, okay? So hear me out. Pizza party, Tuesday, August 3rd in New York City. I'm going to do the live. I'll even talk to them about doing the live from there, and we got it, okay? Probably start at like 6 o'clock, and we'll do that. We got this. And then if we have to, we'll go to my office. We'll bring the pizza there, and we can all hang out in the office in my conference room and have a good time. And I'll have good internet and everything. Okay. So there you go, John. It's Tuesday, August 3rd. Okay. Greg. Okay, hold on. I saw Greg. That's it, the little pink thing. GR, how are you, my man? Okay. Ruben, I love it. Okay. Yes, Desi, I agree. There's definitely math on this thing, okay? There's definitely math on this, but here's what I tell everyone. Yes, there's math, but it's not a math test. What does that mean? That means that they're not testing your math ability. They're testing your ability to find the numbers. So yes, there's math on the test, but it's not insanely hard. It is much more about, do you know where the numbers are? Like PE ratio, earnings per share, they're on there, break even, all that stuff, convertibles, all that stuff, tax equivalent yield, Jessica. All those are on there, but they're not that hard. It's really adding, subtracting, and dividing. Unlike Past Perfect or Kaplan, sometimes, and yeah, I think that works. Kaplan and Past Perfect, sometimes their math questions are like punch you in the face and you struggle, especially more Past Perfect than anything else. Okay. Desi, great advice. Great advice. I'm not a fan of 4 to midnight thing, but you should just lock down your life for a month and you'll beat this. You got to do that. You have to be on your own and just get this shit done. Okay. John, did you get it? I'll text you if you didn't get it. Ever and again, Tuesday, August 3rd in New York City. Okay. Justin, I don't have a lot of videos. Okay. Greg, I will do that. I will do that on Thursday. I'm going to do ESGs on Thursday. Maybe I'll just do a video out there. That's actually a good question because they are going to show up. Okay. I'm going to do an ESG video that may help in how we work on this. Okay. Guys, also, I'm not hanging up yet. Don't worry. Also, don't forget I do my live. Not my live. I do a live on Thursday, but then I do the weekly wrap-up with Peter Tuckman, who I'm trying to figure out how to get on here one time. Okay. Now, do I have Form ADV for the 66? I don't have that, although I may have it in my quick and dirty one. Form ADV. Oh, yeah, I must have it. Investment advisor. Look under the investment advisor one, Justin. But Form ADV is 2 parts. There's 2 parts. Part 1 is the facts, okay? That's like how much money we have, who we are, all that crap. It's all the facts. That's filed with the SEC or the state, and that's there, part 1. Part 2 is a disclosure document. That lists my control, how I manage the money, all that stuff, okay? It's all my disclosures. I'm ready for my dog to go crazy barking because I think my son just came home. I'm down to 3 dogs. Amazing. So part 2A is the disclosures for the firm. Part 2B is the disclosures for your team or your individual group. So part 1 is the whole investment advisor. You can look them all up. Anyone who says they work for an investment advisor, or if they're a principal or own it or whatever, you can go right on there. It's amazing. You can even go on the SEC website and get like a broker. You can look at a broker dealer. If somebody says they own a broker dealer or work at one, you can see if that broker dealer makes money or not. It's pretty freaking amazing. So now, Form ADV, part 1 is the facts. Part 2 is disclosures. That's 2A for the firm and 2B for the individual. I do think I have a video on that. Okay. S Corp's good for smaller businesses. Okay. So there's 5 different types of corporations. Watch my quick and dirty one. So S Corps are better for smaller because they can only have up to 100 investors. And they all have to be U.S. residents and individuals. So yes. So what are the pass-through ones? Technically, sole prop is, but really, LLC, limited partnership, and S Corp all pass through. C Corp is the best to raise a shitload of money, but they don't pass through. You pay double tax. Okay, hope that helps. Okay. Oh, I wasn't going to say that. So that's very funny. So, okay. So now, yeah, Aaron, that's fine. So just, it's not, here's the thing. You could do that, but, well, okay. Okay, hold on. Yeah, I don't like AD Banker at all. AD Banker is good for stuff. So someone who I won't mention made a good point. She's pregnant, very pregnant. And if you're taking the Series 7, that's 3 hours you have to sit in there. Okay, Google, cancel. So if you are pregnant, you might have to go to the bathroom more than you think. So, and to save time, you could wear a diaper. If you're worried about time, you could wear a diaper. But I'm going to give you a little hint. I think somebody once told me you can't pee in it more than twice. Anything more than twice, I can't believe I'm saying this on my live, but what it is. So if you really have a problem with sitting in there, put a diaper on. Nobody cares. They make ones. Nobody will ever know. Just going to leave it that way. So all you women out there who are 6, 7, 8 months pregnant and taking this test, God bless you. You're amazing rock stars, but maybe there's a way to handle that problem of it. I can't believe that my live just went to that, but that's okay. because that's all natural. Okay. So calling, competitive versus negotiated. Okay. So if I'm doing a geo or if I'm doing some company and I don't want to sit there and negotiate, I can do a competitive bid. A competitive bid, and I'll do a video on this. Competitive bid is where you announce like a geo on like official. They do the official notice of sale in the bond buyer, and it says, "Hey, we're doing a bond issue. We don't know the coupon yet, but we're going to raise $20 million for high school or something like that." Yeah, high school like $120 million. All the different syndicates will bid on the issue and give you their best price, what they want to pay you, for each bond, and then what the coupon will be. And you, as the issuer, will choose whichever one costs you the lowest over the long haul. So competitive is a bunch of underwriters bidding for the project, and whoever it's the lowest cost to the issuer wins. That's competitive, and usually it's firm commitment, which means that the underwriter is financially liable that if he doesn't sell those bonds. That's competitive. Negotiated is like a bake-off, where what happens is I'm an underwriter, I'm an issuer, I'm going to issue some bonds or stock, and all the underwriters come in and sell me, the underwriting and syndicate groups come in and sell me on how they can help me, so how they can sell my bonds or shares, and then I choose. So it's negotiated. So we're sitting in a room negotiating, and whoever comes in with the best price for that works out for me, I will pick. Or maybe not the best price, but maybe the person who I think has the best chance of selling my shares. Because a lot of time, here comes a big moth, because I have the light. A lot of times, negotiated is going to be best efforts where they're not financially liable for selling the shares. So competitive. And again, guys, if I'm going too fast for you, just slow it down or watch it tomorrow on slow speed. Press pause. I apologize. I think Teresa's the one who said a long time ago, you can put it on a slower speed and it just slows down. But I have anxiety. I can't not talk fast. So competitive is where they bid on it, and it's usually firm commitment. Negotiated is where we come in and convince you to use us, and it's most likely best efforts, which in some form or other means whatever the underwriters don't sell, it goes back to the issuer, and the issuer takes the risk. Okay. Aaron, I love doing it. If you really need to get the 7 done, maybe you do quit your job if you can afford it. And sometimes going all in makes it better because it's a pressure on yourself. But you don't need more than 3 hours a day. If you can study 3 hours, if you can find time to study 3 hours a day, whether it's in the morning or afternoon, whatever it is, do it. And then you don't have to quit your job. You can still get paid. It also makes it. I'm also a big fan of taking a day off, like 1 day a week, take Friday off and don't study at all, but make it up on the weekends. Because you need a brain downtime. Okay. The hiking. Do I have another 66 that is more in depth than the quick and dirty, trying to figure out all the partnerships and advantages and disadvantages? No. So what I don't yet, I'm going to start breaking it down, but I wanted to get that out there to help people. They don't go that deep. It's not like you have to be a lawyer, but the whole point of that is if you have the STC book or whatever, you can kind of follow along in a way. But I'm going to start. I want to do a partnership one, but like the limited partnership stuff, keep in mind it's not super detailed, but there are advantages, and I think I went over them. I will try to do a partnership video in the next couple of days or so. Okay, so now I think I'm doing a competitive versus negotiated, and then I'm going to do a partnership video. I should probably take notes, but I'll just watch this. So I'm going to do partnership one, all those like the S Corp, C Corp, stuff like that, a little more in depth. But remember, it's not that deep on the test. The corporation stuff is not super deep, but you want to know which ones are pass through, which ones are not, which ones for big corporations. That's a lot of it. It's not super duper detailed. Okay. Robert Baptiste, I love that. Serious study time. You're going to be involved. Okay, I love it. That's awesome. So don't forget, if you're a member on the second level, which is a serious and VIP, I do once a week, Monday afternoons, 3 o'clock. I do a Zoom call. The invite should go out to you. And again, thank you so much for joining. And for the high level ones, which I'm not pushing for, every other week, I do every other Tuesday in the afternoon, I do a, a one-on-one or at most 2-on-1 Zoom. Okay. Robert, so thank you for joining. Okay. Okay. Yeah, it's right. So that Teresa's the one who said it. Okay. Put me on 75%, and I think I sound normal. And then it's funny, the other side is in training consultants, Tina, you should turn to 140%, and she sounds normal. So maybe the mix somewhere. Okay, Sean, for the STC, For 63, yes, I think STC is solid. Okay, I do think that the STC is solid for the 63. Okay, again, Rosenberg. I think that's the name, Rosenberg Baptiste. There's a great with your last name. There's a great face-off guy in lacrosse called Trevor Baptiste. He's the shit. So he's a monster. Okay. How many offer questions will there be? Probably 2 or 3 at best. Not that many. Okay, not a crazy ton. Again, STC is good. Kaplan is good. Achievable is good for the 63 now. I like their stuff. And again, Brandon's videos are solid. So if you want to get the 63, so you either get STC, Kaplan, or Achievable, any of those work. You can do Past Perfect. I think they go too deep. I think they go way too deep on it. But if that's what you have, it's fine. It's not going to kill you. Okay. Can I talk Coverdell versus Plan 29? Yes, I can. Okay. Yeah, I can't. I can sort of see it. I'm blind. Okay, hold on. Yeah, okay, hiking. Don't freak out. Okay, don't freak out about right, it's 1.7 speed. That's funny. Okay. So don't freak out about the super duper details of the partnerships. It's mostly about what you want. So prop is for me, myself. I have unlimited risk, stuff like that. It's more about the risks and rewards, right? So LLC, you can have as many members as you want. I think I said this, and you have limited liability, but you can be involved, and it's a pass-through. Limited partnership. What I covered is probably what the test is, where STC goes deep. Limited partnership has an LP and a GP. LP has limited risk, but can't run the company. GP has unlimited risk, but takes all the risks, a general risk, but runs it. Okay. If the LP gets too involved, he has to jump over. But again, it's passing through investments. S Corp is a pass-through also, which means all the income passes through, but a max of 100 investors. This is where the test is, okay, guys, on this stuff. They're not trying to make sure you're an accountant. You're any deeper than that, you need to be a lawyer, because you're not supposed to tell people why to set one up, just to know what the stuff is. And a C Corp is great for if you're going to raise a shitload of money. But the problem is it's double taxed, but you have unlimited investors, and the structure is good for every public company you've ever heard of is a C corporation. Okay, so now, hiking, don't freak out about this stuff. Do not freak out about the little details. Okay, hold on. Okay. Coverdell versus 529. I think I'm almost caught up. So, and I got to jump. Oh, I got to jump in about 5 minutes because I got a student. Okay, totally forgot. Let's see. Oh, he just said, so he knows. Okay. Now, let me do Coverdell versus 529. So, first of all, if you know me at all, you know I'm anti-federal government. I think they're too big and they shouldn't be involved. So Coverdell is run by the federal government. So it has a lot of fucking rules that are stupid, okay? So Coverdell, let's go with this. It's run by the federal government. 529 is run by the state. So it's considered a municipal. Their rules are. So federal government is bad. Remember that, okay? So Coverdell, it's for people who has income limits. So if you have to make too much money, you can't put money in. It has contribution limits. You can't put in more than $2,000 a year. Okay. When they turn 18, you have to give it to the kid. Wow. When they must use it by the time they're 30, or they pass it on to someone else. So again, think about this. The only thing that's good about a Coverdell is that you get to control your investments, but it's $2,000 maximum. If you make too much money, you can't do it. Once you turn 18, they have to give it to the kid and you have to stop, and they have to use it by the time they're 30. Okay. 529. The bad part is that you can't control your investments too much. Each state has their limits of different mutual funds, but fine. You shouldn't be gambling on that shit anyway. So now we have no income limits. It's run by the state, so it's a little bit better. I'm a big federalist guy. Okay. 2. Yeah. Hold on. 2. There's no age limit. There's no income limit. The contribution limit is whatever the states require, and that's like hundreds of thousands of dollars. So it's not really a thing. So you don't have to give it to the kid when they're 18. You can give it to whenever they want. Or if the rotten kid decides not to go to college and just be a bum, granted, to be fair, a lot of people can not go to college, trades, and they can make way more money than someone that did go to college. Okay. And yeah, Desi, I know you'll be on the live because you can't come into the city that many times because you'll be 8.5 months pregnant. Can everyone give a little more snaps to Desi? Understand that she took this test and worked through this pregnant. which is fucking insane. It's like we are not worthy kind of thing. Okay. Boom. So hope that helps. Hey, Armana, how are you? So hope that so now the thing is, so 529 has income limits and all that. Oh my God. Coverdell has income limits. 529 does not. The problem with the 529 is you have a limited amount of how much, what you can invest in. Now, both of them go in after tax. Both of them go in after tax contributions, and both of them, if you use it for school, is tax-free. The Coverdell you can use for any education. 529 is for all for secondary, but you can use up to, I think, 10 grand for pre-college. That's the differences. Okay. She took the 7. Okay. She is a savage. If you ever talk to her on the phone, you'd be very impressed. She's going to be a rock star one day. Okay. She already is, but a big one. Okay. Now, Sean, I'm going to do exempt transactions, then I do have to jump in a second. So, Sean, there's a button usually next to my name down here. It just says join, and you pick which level. That's all it is, right? No feds. I'm a federalist, which means I'm a big fan of states' rights. It's my thing. I don't think I can't think of a single thing the federal government has done better than anyone else. Even fucking Richard Branson went up to space for less. Okay. Now, if the 65, I think Kaplan or STC are both fine. Some people think STC does a. See, here's the thing. This is what one of my students came back to me. He said, STC does a better job with the investment professional stuff, like the portfolio management, all that, and Kaplan does a better job with the states. So the 65 is more in the portfolio thing. So I think the Kaplan is pretty good. Also, take a look at Brian Lee, who I have a lot of respect for, but I finally am ahead of him in subscribers. But he's the man. He's really solid what he does. He has a good program. It's not expensive. So that's not a bad supplement to your materials. Like if you have Kaplan or STC and get the Brian Lee stuff, that's really going to help you. And it's not that expensive. It's like $60, $70 for his whole video program. Okay. Georgiana, good night. Oh, you did buy it. Oh, say Brian Lee, I do like them. Okay. Yeah, the other thing I like about this is that people have come on here and become sort of friends on here, creating networks. Okay. Yeah, I'm telling you, Past Perfect is a son of a bitch of a program. It really is. But guys, I like the fact that I'm on it and Ginger and all them kind of connected. I got some people in the study group with Jacob doing it. I think long term, you may create some connections that you may have for the rest of your lives and stuff like that. Like there's a Rachel who does it. She actually hired one of the people on here. She's looking to hire some really nice people. She ended up sending an offer letter out to this guy Matt. It was great. Okay, now. Last one, exempt transactions. I think he said exempt transaction. I'm going to end with that. Okay, exempt. So let's make sure we got this, okay? One, I've done a video on it, so check them out. Exempt securities are always exempt, which means whenever they issue shares, they are always exempt on the state level. Exempt transactions are for securities that are not normally exempt, but because of the way you're doing it, they won't have to register. So like if it's an unsolicited non-issuer, which means the client called you and said, I want to buy some of the stock, it's exempt transaction. You have to be registered, but the security won't be in the state. Or a private placement where you're selling it to all institutions and up to like 10 retail, stuff like that. So exempt transactions are like a one-off. Like each time you'd have to like not get an exemption, but like show that you have an exemption, like a reason to not have to register. Where exempt securities are just never, ever, ever registered. Guys, I think that helped. Again, go check out my video on it. I have a video on that I have a video on exempt securities versus exempt transactions. Take a look. If it doesn't make sense, come back and hit me up on Thursday. Okay. So Aaron, that's okay. Boom. Yeah. So, Aaron, if you want to join this, if you're taking, so Jacob, Aaron, before I go, Aaron, if you want to join the study group, okay, and you want to just talk to people, I mean, maybe, I don't know how you did it. Can you take one more person? Oh, the SIE, that's fine. I think they're still doing it. You're going to learn. maybe jump in and you can learn some stuff, because if you're taking the next test, it's going to help. I think there's a couple SIP up there. Okay, Convey Wonder. I like Achievable. I really do. They have a shitload of questions. I really do. I'm not just saying that because I can make a little bit of money off you click on the link if you have it already. Okay. Convey, I like their questions. I have at least 5 people after I've done the final say they look more like the exam than the others. So I'm there. But now, Aaron, email me, shoot me an email at kenfinnan@gmail.com, and then I'll hook you up with Jacob. And if he has room, he'll let you in. If not, we're not going to worry about it, okay? Guys, love it. Thank you very much. I got to go take care of my student in California. He's probably on here patiently waiting for me to get off. Everyone, Desi, congratulations. Guys, everyone, Taylor, you're going to fucking nail it even though you're not on here anymore. I know that when you watch this later, you're going to see that we predicted you are going to rock this thing and be done. We did a 30-minute session the other night, and she's going to nail it, okay? So Aaron or, Jacob, don't put your email on here. I'll shoot it. If I'll send him over, and we'll go from there. Guys, everyone, wash your hands. Greg, thanks for the idea. I'll do an ESG video. Wash your hands. Greg is still on. I love it. Everyone, have a good night. Wash your hands. Have a couple days and go watch the All-Star game. What's left of it. Y'all, good night.